Good morning everyone, my name is Tolly Sakellariou from Trading Waves, and this week we would like to review one of our heavyweight stocks in our local market, and that's BHP. Now, given the severity of the recent decline from the 39.74 high on August the 19th, plus the fact that BHP is fast approaching our downside target, we thought it'd be appropriate to review and provide an update from our most recent BHP report published on September the 25th, warning of continued downside risk towards the $31 to $32 area. Now, in that report, we highlighted that our trend change date on September the 17th produced a reversal high and subsequently major support in the 35 to 35.50 area had now been breached, and in coming weeks we should see continued weakness towards that $31, $32 target by at least mid-October. The weekly chart emphasized a completed wave structure, and the pattern itself appeared to be a corrective pattern rather than anything impulsive. So once the breakdown did occur around the 35 to 35.50 area, it was fairly evident that BHP was likely to decline down towards that area of support in the $31 to $32 region. We will now focus on most recent price action, looking at the daily chart and Friday's close of $32.31. Momentum aspects appear to be building a bullish divergence, particularly on our volume indicator, which is our demand index. And we can clearly see that on previous occasions where the demand index was diverging, a sharp price reversal did in fact occur. One example is the February high. Price rallied to a new high, but the demand index failed to confirm that. Price action was followed by a very sharp reversal, and again in early August the market rallied into what appeared to be a clear breakout to the upside, but the demand index or the volume indicator failed to confirm that, and what was followed then was a very sharp decline. Now, as we can see in recent days, as price action has reversed to a new recent low, the demand index is in fact diverging, which is an early warning sign that there's underlying strength and an imminent sign of an impending low in coming days. We can also see that consolidation around the 35.50 area will more than likely prove to be the midpoint of this particular decline from the August 19 high, and our ever reliable timing models are now pointing to a high probability trend change due this coming Thursday, October the 16th, and ideally closer to that $31 region. And if we now switch to our weekly chart, we will also notice that the RSI is clearly oversold, and in previous occasions when it traded below a reading of 35, it also proved to be a great buying opportunity. Now, BHP, based on how it traded in the US last Friday night, will be down hard on Monday morning, most likely testing this area of support. However, we are not yet in a hurry to buy it, as it needs to consolidate lower for at least another 2 to 3 days, and our timing models are not due until Thursday of this coming week anyway. So bottom line, short to medium term traders may be inclined to buy BHP ideally on either Wednesday afternoon or Thursday morning of this coming week, and as always we will look for evidence first of a price reversal, ideally in our intraday 30-minute charts, before we pull the trigger. We hope you enjoyed this video update, and best wishes to all.